Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Tuesday, August 18th, 2020. And here are our top stories. Millions turned to online trading during the pandemic, but is this a good thing? And building a fintech is incredibly expensive. Joining me now to discuss this and more is Daniel Klein, Senior Technology and Consumer Products Reporter with The Motley Fool. Dan, thanks so much for joining us on the program this morning.
Hey there, Jeff. Thanks for having me.
It's great to see you. As always, great to talk with you. So a bit, in my mind, of a disturbing story. It's good things and bad things in this story. But a lot of people during the pandemic, working at home, staying at home, they did a lot of trading over the last 4 months. So says Robinhood. Thoughts on this?
So trading is a bad thing. Trading is playing roulette. If you invest and buy and hold in good companies, history says you will make money. The stock market goes up in the long term. We've looked at our portfolios across the entire Motley Fool and have recognized that if we never sold, literally even just never sold stocks we knew did terribly and weren't going to come back, we'd actually be in a better position than the limited amount of selling we do. So mostly we issue buy recommendations. We very rarely issue a sell recommendation. Now that said, occasionally something goes wrong with the stock and we'll tell you, yep, we're giving up on this one. Luckin Coffee would be a good example. They had some accounting fraud and we recommended it in a couple of places, and in most of them we came back and said, nobody could have seen this coming, but cut your losses, get out of it. People who are trading are basically saying, okay, I think that this stock that I'm going to buy on Monday, by Monday afternoon, it's going to go up, it's going to go down. That's gambling. You're guessing. A lot of people right now are asking about Tesla stock. Should I buy Tesla stock because it's about to split 5-for-1? We've talked about this before. A split is cosmetic. It's just cutting your pizza into more slices. It doesn't change how much pizza you have. That said, Tesla stock was up 12% yesterday and it's up 4% today, but there's no guarantee that it won't be down 20% tomorrow. Nobody is smarter than the market. Jim Cramer isn't smarter than the market. If you want to make money in stocks, buy companies you believe in and hold them. Now, can 5% of your portfolio be speculative? Sure, if you want to own, a cannabis company like Planet 13, which is a company I really believe in, I think they're going to do well, but they're a very small company. But if you want that to be a small percentage of your portfolio, yeah, it has the potential to do really well in the long term. One of the things we try to discourage on our platform is people who ask, why did this and this go up or down today? Now, if there's a reason for it, we'll write a story. If something changed, management made a decision, earnings were below, we'll explain it to you. But if it doesn't change our investment thesis about the company, it's effectively meaningless. The other big negative on Robinhood, and I don't mean to pick on the platform because there's nothing wrong. It's an easily accessible, platform for investors as well. But they also offer margin accounts. Margin accounts lets you trade with money that's not yours, and if the stock goes down, they will ask you to cover that margin, meaning you either have to sell the stock or you have to give them money. That is a bad situation. They also allow unskilled traders to trade in options. We recommend, it's one of the basic tenets of our investing platform, don't trade options for a year. I would actually argue that unless you are paying for something like our option service, where you're really learning how to use options, or you go to school, there's lots of books on how to trade options. You don't have to pay for one of our services. You go to the library and pick up a book on it. Options can be dangerous. It's a way to lose money. We tell people, just don't trade options for a year. Learn what you're doing. Look, I don't trade options. I buy shares in companies like Microsoft that I believe in that are going to be, slowly growing over the next 20 years before, I in theory retire. I'm never going to retire. But that said, a lot of young people, they're using this like sports betting, and that is a terrible idea. It's a terrible idea no matter what your age is, frankly.
Yeah. Dan, a couple things that, you remember a couple of weeks ago, maybe it was a month ago, we talked about people getting their financial advice from TikTok. And, Robinhood, to the best, and I've not used the trading platform. It seems like you have more knowledge than I do about it. But the sense to me is that it's a community. That's great. We want people to reinforce saving money and putting money away and diversifying your portfolio. But it's almost like in the community, people are sharing stock tips And then what's happening is that you get a lot of group think. And so my
Yeah.
concern with some of these platforms is that you get that group think, and then the causation is to go ahead and make a trade.
Yeah, so here's what you're getting. You're getting pump and dump schemes, and that's a problem. So if somebody comes into a group, and we have this problem in our unofficial Facebook groups, we can't clean it up as fast as it happens. Somebody comes in and they says, "Oh, you should buy Nikola." Nikola is a Chinese electric vehicle company that has no orders and no products. I mean, they have theoretical orders, but they're very small deposits and they're cancelable. It's a pre-revenue company. It's an idea on a piece of paper. So trading in that is, of course, incredibly speculative. But if somebody comes in and they can get enough people excited about it, they will tell you to get excited. They won't tell you that they're going to sell out of it before some actual news comes out. It's a company that had $38,000 in revenue. All of that revenue came from doing some work for its CEO. It's a zero revenue company. There's a ton of companies out there like this. Not saying, again, if you truly believe in one, you can't invest a small amount. You know, the other thing you see on platforms like Robinhood, I don't mean to pick on Robinhood, is you'll see people say things like, well, airlines are really low. They can't possibly go any lower, and we're not going to get rid of airlines. Here's the reality. We've had 40-something airline bankruptcies in the last 20 years in the United States. Airlines can go bankrupt. You know what happens when they go bankrupt? You lose your equity. The airline still flies. The CEO probably keeps his job. The bondholders get paid some portion of what they're owed. The vendors get paid what they're owed. You know who goes away? The shareholder. People were trading bankrupt JCPenney and Hertz stock, trying to bid it up so they could sucker other people. Don't be one of those people. Don't play that game. It's a terrible idea.
What is the responsibility or culpability for a company that offers a community like that to monitor that? You mentioned not you, but Motley has to try to clean up its Facebook page. But what about these communities where people are coming in and there's disinformation and there's bad information or misinformation? Is there some level of responsibility, or does it just fall on the individual to say, look, I am not going to follow the herd. The herd gets slaughtered. I'm not going to do it.
So the individual has a lot of responsibility. And it's something I talk a lot about on our live platform and on Motley Fool podcasts. So I'm a writer for Motley Fool. I have opinion on stocks. They're well-informed opinions, but I'm not a stock analyst. The people who are on our stock analyst teams, my colleague Emily Flippen, who runs our Marijuana Masters service, she spends the vast majority of her day researching cannabis stocks or cannabis adjacent stocks, because most of that portfolio is not cannabis, pure plays. It's companies that touch on that industry. So her opinion on those stocks, I don't want to say it means more than mine, but it kind of does. And there are a lot of things on our platform. There are Fool.com writers that are younger and newer. So I say, one, don't act on any one person's opinion. Now, I would look at the track record of something like a Motley Fool stock advisor, where we show you the last, 20 years or however long the service has been around of history. And we say, hey, here's how it's beat the market. Here's how each individual stock is done. Well, that's a lot more valuable than you can look in our service called CAPS, where if I make a recommendation on something, I have to thumb it up or thumb it down in caps. And you could say, okay, Dan's right about 70% of the time. He's doing pretty well. Dan on TipRanks, which is a third-party company that compiles, what various financial writers are their recommendations. Oh, wow, Dan's in the top 100 out of like 10,000 in terms of advice. That gives you some credibility, but it doesn't mean I'm right. And in terms of like starting your research, I view it like movie reviews. So if you're watching a movie review show and you tend to always agree with someone, when you go see the movies they liked, they're the movies you like, well, that's a good place to start. So if you like the stocks I'm talking about, well, then go do real research. Go read an earnings report. Join a service like Motley Fool. And we are by no means the only credible one out there. Join credible services with long-term track records and say, oh, wow, Dan likes it. I like Dan. It's also recommended by David Gardner in Rule Breakers. And wow, his track record is really impressive. Hey, and these 3 other writers I follow are, that are professional writers, not people who are, trying to pump up the price of the stock. Really do your homework. It's very important. Or don't buy stocks at all. Buy ETFs. If you just bought the NASDAQ, you'd be doing pretty well right now. Or if you believe software as a service, which has done incredibly well, is going to do well, go out and buy an ETF that tracks software as a service. Worry about if there, the fees involved and other things, but there's no rule saying you have to buy individual stocks.
Yeah. Good. Definitely good points. Well, Dan, we're going to take a quick break. When we come back, we're going to talk about fintech giants. They're really expensive to build. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
If you are like 58% of Americans, you didn't go to college. Or you did, but never finished. Maybe it's the thought of a big, intimidating campus. At Independence University, all classes are held online. Maybe it's the thought of being alone in a sea of students. At Independence U, you'll get a personal support team to help you every step of the way. Maybe it's the cost of all those books and supplies. Online means no books to buy. We even give you a new laptop and tablet to keep when you graduate. Maybe your life doesn't fit typical college classes. At Independence U, our online college fits your schedule. Let's meet a few students.
Independence University held my hand through the process.
Don't be afraid to take the leap because it has changed my life drastically.
Just take the first step and you can do it. If I did it, you can do it too.
At IU, there's no barriers to your degree.
800-535-9916.
Welcome back. We're talking to Dan Klein of The Motley Fool. Dan, thanks so much for staying with us this morning.
Thanks for keeping me.
So you want to build a fintech giant? I want to build a fintech giant. But Dan, it's pretty expensive to build a fintech giant, don't you think?
Yeah. So look, if you and I have an idea for a product, we can sketch it out in our garage. We can contract with third parties to make it. We can take a prototype and put it on Kickstarter and raise funds. There's lots of things you could do. So let's say we want to start, a brand new way to loan people money. It's brilliant. It's a great idea. Well, you need money to loan. You need to deal with the regulatory, aspect of that, which is significant. You need to deal with the security aspect of it. You can't just email people money or set up a PayPal account to be the revolutionary new way to do this. There is a big barrier to entry here. Now, that said, there are lots of companies trying to enter this space. There are giants operating. You take like a Mercado Libre, which has become the payment platform and the Amazon for much of South America. But that said, it is really a difficult, expensive space to enter. It's probably also the most exciting space to look at right now because, one of the things I'm sure you've noticed, Jeff, is we've accelerated contactless payment and other methods of moving money around because it feels a little bit icky, no matter where we are, to hand someone a $10 bill. It feels a lot better to hold up your phone and make that payment. And we've seen a massive acceleration, especially among older younger folks, people who were resistant to this, where they've recognized, I have to learn how to do this. I have to set up accounts to do this, or I'm going to be left behind. The days of someone in the grocery store in front of you writing a check, those are probably over.
Yeah, I think we agree, and we covered that earlier in the last week on the show. I think contactless payments and virtual payments, they're here to stay. But you bring up some really interesting points about the regulatory framework. I would also say that, here we are 30 years, 25 years after the founding of the internet, or the blow up of the internet. The Googles, it's really hard to replicate what a Google or an Apple, which has been around for decades prior to the founding of the internet, can do. You're coming in a very mature industry. And so being able to differentiate and then therefore attract funding in some level, whether it's from friends and family, whether it's through Kickstarter, whether it's through VC, that's not an easy thing to do. There's a lot, I think what a lot of entrepreneurs underestimate, or people who are kind of not entrepreneurs and see this, is that there's a lot of grinding or trench work that has to be done each and every day to take something from the idea into the implementation phase.
Yeah, absolutely. And look, you need hundreds of millions of dollars to enter this space. So, you mentioned it's impossible to build the scale of Google. You can't start thinking you're going to be the scale of Google. We've all done the business plan, and on your business plan, you have to do that. You have to be like, we're going to be $1 million in year 2, 200 million in year 3. We're going to be bigger than Apple in year 5. Well, that's preposterous. So let's look at a recent success, forgetting the politics and the banning and all the issues. TikTok. TikTok has, 200 million US users. When that started out as a Chinese company, they slowly rolled it around the world. And the standard for success wasn't 200 million users. It was, can we get a few million people? Can there be sustainable advertising? Can we build that business? Look at a growing company like Pinterest. Pinterest has aspirations to be bigger than Facebook, but it didn't set out to be bigger than Facebook. It set out to fill a niche, and if it can grow that niche, it can then become a bigger company. And right now they're trying to figure out how to monetize their global traffic. They make a lot more money on per American that uses it in advertising than they do per global user. They're tackling little chunks of it. So any company that comes into the fintech space is going to identify a need. We are the funding source for toy stores that gets paid on December 26th. That would legitimately fill a need, because when I was in the toy industry, terms got tighter from your vendors. Vendors used to wait till Christmas season to get paid, and that's no longer the case because banks got tighter with those vendors about extending their own. So who comes in and provides the bridge loan? That company can make 2 or 3 cents, or 2 or 3% on the float there. There's all sorts of niche areas, and once you do that, let's say that's a real thing. You've done that for the toy industry. Well, maybe that also applies to the fishing industry, but that cycle is a little bit different. That cycle is we pay you in June. You can do it. And, for all you budding entrepreneurs out there, think of biting off things in small chunks, but recognize that you're probably, the days of creating a fintech company on the back of a napkin and building it yourself, the technology no longer lends itself to that. There are too many privacy concerns. Look, I go most years to the Electronic Transaction Association show, and there's always like 200 startups that are, they have this sad little booth that barely has a sign, and they have like one photocopied sheet about what they do. And I'd say 80% of them are like pretty good ideas, but like of that 80%, like I could point to maybe 75% of that 80 where there's a giant company on the other side of the trade hall that has that function as some tiny piece of what they already do, that already has a customer base. I'm not saying don't innovate. I'm saying be very skeptical, find a very small problem and solve it. A buddy of mine did really, really well because he's a tech guy, had started a design and website company that sold and did really well. And he races cars. And he said, why is there no software designed to run races that I can get for free and take a tiny percentage? The company that provides it takes a tiny percentage of registration fees. And he knew that industry because he raced cars. He built that software, built a very successful, very small business that you've never heard of, only a handful of people. And then he sold out to a major auto supply company that can help him grow his business. And, and he got a nice payday and he has a really big job. That's how you have to approach things.
Yeah, I think the key here, Dan, is little steps, and maybe the first step is be profitable. From profitability, right? You don't want to, no one's going to hand you money if you are not profitable. So maybe that's the first step, getting there. And then you're right, it all comes in steps. And I think it's unlikely that you're going to hit the home run the first time out. Well, Dan, we're going to have to, go ahead.
I was going to say, I'll just add one thing. You need to have a roadmap to profitability, and you need to hit those goals. It's fine if you're Uber to push off profitability to 2025 because people will loan you billions of dollars. If you're talking hundreds of thousands or millions, you're not going to get the money if you don't hit your goals. And think of it first as a business, and then if it builds to a home run, that's great. But a business that pays some salaries is just as valuable to you as the next publicly traded giant. You want to be successful. You don't have to be a billionaire.
Yeah, absolutely. Well, Dan, always a pleasure chatting with you. Great talk, great perspective. Look forward to having you back on the program again very soon.
Jeff, I'll see you next week.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line. And don't forget, for all the news in retirement markets, technology, personal finance, and so much more, all in one place, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.